Hello everyone, thank you for joining me today. It's February 2nd, 2023. This is not financial advice. Please don't copy any of my trading strategies because you will lose money. This is only for educational purposes. So, as you can see by the chart, we started the day very bullish. This is obviously because of what I mentioned the other day. Meta announced a very large buyback program of their shares, which is going to reduce their float on the open market by about 10%. So that was perceived very bullish by the market. Everybody, all the tech stocks, majority of the stocks had a huge rally. And even though we gapped up high, a lot higher over here, the gaps like to be closed in my experience. So it started like that was going, it started looking like that was going to materialize here as well. You could see by the series of lower highs and lower lows over here. Fortunately and unfortunately, it never really materialized all the way to the bottom over here. I guess over to this high is all we had to go to. And because of this, I had to be very cautious of where I'm placing my trades today. Let's see. So this is actually the longest that ever took me to enter into the SPX puts and calls. My first one was I took the safe route and I opened it up. I sold the call very high and I only collected $95 for that one. My second call was at 4,200, just one strike below that was 175. Then I started getting confirmation that we're probably not going to go down as much as I thought we possibly could have. And I opened up these two puts. These two puts right here. And at the same time, I entered into this call as well. So all in all, that was a $970 of premium collected. And that includes already the $970 already includes buying back this 4190 call. I wasn't gonna buy this one because I didn't think we're gonna be able to test this 4190, even though we went in there in that territory today. I didn't think we're going to be able to do that again, and I'll show you why here in a second. Let's go to charts. Let's go to the flex grid. So as you could see, as we were climbing over here, we hit at the beginning of the day, we were right here on the advanced decline line. Then obviously sold off, climbed as high as up to almost 1,600 stocks that were advancing and tapered off somewhere between 1,400 and just about 1,500. When we had that sell off, it never would have been able to get to this level right here. So I was fairly confident. If I wasn't looking at that particular trend line, I would have given up a lot more premium and wouldn't be able to collect as much money as I did today, just because it did look like the market was going to go up again. Here, let's switch back. It looked like, we sold off and it was climbing higher and higher and higher. But you could see from here, this is a good example. You could see from here that even though it was climbing higher, very little chance that we're going to have the rest of the market participants that were over here start climbing with such a short amount of time. Even though stocks like Apple and, as you can see here, almost reached its highest high. Microsoft, not so much Amazon, they were kind of tame, but Berkshire and obviously Google. But because of this particular graph, I ended up collecting more money. So again, this is a very good tool to watch. It doesn't always, what I'm trying to say is, I guess, don't always trust this. But this just reconfirmed what I was feeling. I didn't think it was going to go up that high, and I was only able to sell it for $5. So that was that for the trading. The total was 970 with this. Here's what it looked like. It had two here, and this is the other one that was sold. So 970 with everything here. Then after our hours, we had a slew of earnings. Primarily, the most important ones people were anticipating is Amazon, Google, and Apple. So let's go over them really, really quick. Amazon beat on sales by $4 billion. AWS was a slight miss. EPS was 3 cents a share versus 17 cents forecasted. And let's take a look what they're doing after hours. Sorry. And they had a huge spike, and they sold off. So that's 1 out of 3 that sold off. Let's check Google. Google did a good job overall on sales and revenue. The only thing that didn't do well at all was YouTube. The earnings per share was $1.05 versus $1.18, which was forecasted. And obviously, as you can see here in the after hours, they sold off. So that's 2 out of 3 that sold off. Let's check Apple. Apple revenue missed on every device, everything that they sell on. It was the first earnings miss in nearly 7 years. Okay, so in nearly 7 years, a first earnings miss. EPS was $1.88 versus $1.94, which is forecasted. And they sold off. I believe something might have been said on the call over here, which made them go up, but they sold off again regardless. So what do you think, guys? What do you think is going to happen tomorrow? I do think that we're going to open up lower, and if tomorrow we have a jobs data, and if that jobs data comes in pretty negative, we are going to have a sell-off, and it might be a pretty big one. So again, you're going to have to be very cautious about placing trades on SPX, and we'll see what happens. So again, I'll make another video tomorrow. If you like the content, please consider subscribing and hit the like button for YouTube algorithm to help me continue making these videos. I appreciate it, and we'll see you tomorrow. Bye-bye.